Hi once again, it's Willie J the trader, the world's #1 order flow trader, Instagram's #1 order flow trader. I'm about to show you a bearish example. So as you can see on the monthly chart, which is our largest time frame of reference, the monthly sentiment or the monthly psychology is bearish because prices is trading below the open. Okay, now because the strategy is just a daily strategy and you typically do not stay in trades longer than a day, it's a quick scalp strategy. We've confirmed bearish sentiment on the month. We switch to the weekly to see alignment, and there we go. So bearish month, bearish week is alignment. Now let's simulate how we would have predicted the high this time, not the low, the high of a bearish candlestick. Put your open line, which is equilibrium line #1, at the open of the bearish candlestick whose high you want to predict, and put the equilibrium line #2 at the previous day's open. Now we see that yesterday wasn't really a bearish momentum day, but from experience I know this. I mean, you just want to see that there's a gap between the two lines, and typically you want to see momentum, but this is just a doji. But because he has a long upper wick, I know the long upper wick is a rally based drop. So now let's switch directly to the 2 hour, and there we go. Now this is the open of today. We go left now, so we are moving into the previous period, which is yesterday. We can't see any structure, so let's switch 1 hour. We are looking for a bearish structure. Now watch this. We are going to go up and left. Now watch me. We are going to go up, and we see this option, first option, rally based drop. But there's another rally based drop which drops all the way down here. So this will be a stronger zone. Mark your distal at the highest price of the basic candlesticks and your proximal at the open price of the basing bullish candlestick before the breakout. Now let's apply our order answers over here. Let's see how much this will score. How much time did price spend at the level? 1, 2, 3, 4 breakout. 2. How far away did it move away from the level? This is 18. 18 times 3, about 50 something. Okay, there you go. It moved away more than 3 times. Now that's good. Is it fresh? Yes. When it went, it hadn't come back into the zone. This is not a retracement. We want it to breach the proximal line by going inside. So it was fresh prior to this entry. Now, how did it leave the level? It left almost 90 degrees. So this we wouldn't get a perfect score of 2, but we would get an intermediate score of 1. You understand what I'm saying? Then the trend is 2 because there was alignment. So you realize that this trade scores 9 out of 10. That's why it works out so perfectly. You guys should always realize that when you are entering a supply, you need to take your target just before this drop based rally, which is the lowest point price went before coming back. Because you see, if you hadn't taken your profit, you would have lost some money because price would have bounced back into this demand zone and you would have lost money. That's why I say always lock some profits just before the opposing level. Thank you. I hope you guys find this video very educative. Thank you.